And we're going to get some insight now from Denmark West, advisor with K1 Capital. Denmark, great to have you back on the show.
Thank you for having me.
Huge day, Denmark. $93.89, a 38% pop from the $68 per share premium. Is this what you were expecting, in line with your vision?
So definitely expecting a pop.
38% kind of pop?
So I thought that it would at least trade into the mid-80s. There were analysts like Morningstar and I think Privco who had suggested that it might go anywhere between $90 and $100. So there were definitely analysts out there that were suggesting that this was in line with what they were thinking. And actually, between those guys, they were actually right. That was actually the bounded range for trading. I'm probably more naturally conservative, but I can understand what the rationale is for them to get to that type of number.
You can understand that this huge valuation that we have now, based on earnings for the year ending March 31st, Alibaba is now trading at a price to earnings multiple of 61. That's pretty lofty. Would you buy Alibaba at $93 at this PE?
So the test is, who do you think is the American comparable? And if you think the American comparable is Amazon, then the question is, well, what do you think that the P to E is on Amazon?
Well, this is higher than Amazon's P.
No, it's not.
So you're saying this is comparable?
It's higher than eBay's.
It's higher than eBay's, yes.
It's not higher than Amazon's, right? And that's one of the challenges that people consistently go back to Amazon and say, hey, you're doing a great job. I understand you're investing in the future.
So you're buying at $93?
No, I am not.
You would not? Would you recommend that retail investors buy at $93? Is this going to be...
That is above the price at which I would recommend. I think that, mid-80s is where I was comfortable, and mid-80s is still where I'm comfortable.
Okay.
I think that there's the prospect of just natural volatility in the markets getting you to a mid-80s entry point.
Well, there was a little more retail investor interest than anticipated. TD Ameritrade said that they had about 15% of their usual volume allocated to Alibaba from the retail investor. Does this bode well?
So I think that that's actually a great question. There's always this negative correlation between retail involvement and actual performance. But I think in this case, you have enough institutional investment, both domestically and internationally, that is probably going to drive the story. The second piece is you've got such a strong growth trajectory associated with both earnings and profits that you're going to be able to manage the price to earnings, because price to earnings is in part predicated on how much growth you're expecting. And this is a true growth story. If you look at their year-to-year growth, both in terms of audience and in revenue and profits, it's very strong, 40% plus.
Denmark, ahead of this, there were a lot of concerns. One of the major concerns was the corporate structure, that in effect shareholders are not buying Alibaba, but they're buying a Cayman Island-based entity that gets the profits from Alibaba. And other concerns, Chinese government regulation, the idea of potential monopoly regulation in China. Do you think that we may see a correction as the hype wears off and those very valid concerns, echoed by Mark Mobius for one, start to sink in?
So I think that the concerns in and of themselves are not going to drive the stock trade. I think that you're going to actually have to see either something that resembles news or actual news. So an event has to occur along those lines. If there's some dampening in the Chinese economy associated with the strength of the Chinese consumer, that's going to be a problem. If the Chinese government overreaches, that's going to be a problem.
Now, you mentioned news, and information could be an issue here, because what American shareholders or investors bought was not a common stock. They bought an ADR, an American Depository Receipt. And one of the challenges with ADRs is lack of information, or not as much information as one would get with a domestic company. How risky could this be to investors down the line? And could this play up, say, when the first quarter earnings come in?
So I think that that's one that we will see very soon. In terms of potential, yes, that is a potential problem. And if you look at the risks, there's probably three big ones that I think people are probably going to be looking out for. One is, how are they going to look relative to competition? They've got very strong competition in terms of both Baidu, Tencent, and there's a couple of other ones that are kind of bubbling up. The second one is, how are you going to treat your acquisitions? Acquisition strategy and the degree of synergy with respect to what you're buying versus what you have. How do those assets relate? How are you driving value? Or are you actually being unfocused? That's going to be a very big concern. And the third point is, how are you managing? Are you making decisions that are based on the fiduciary responsibility to shareholders for Alibaba, or are you focused on something else?
Denmark, it was obviously a big day for Jack Ma, a big day for Alibaba, a big day for investors, a big day for all the underwriters,
Yes.
a big day for SoftBank, who didn't sell any of its shares, a big day for Yahoo. But
Yes.
you say there's an even bigger winner.
I think the biggest winner of all is the Chinese brand. If you think back, the rags to riches story has traditionally been a uniquely American story. If you think about the passion for product that leads to a massive IPO, that's traditionally been a Silicon Valley story. To then take somebody who was a teacher, who then becomes the richest man in China,
Right.
and then comes to the United States and has the largest IPO in the United States. You've effectively taken what used to be a uniquely American Silicon Valley story, and you've co-opted it within a Chinese context, and you've given not only the possibility, which is what Jack Ma has been talking about all day, that you have to dream and you have to believe in your dream and then realize the dream, but you've actually applied that into a context of China.
Is now the Chinese dream.
It now has the imprimatur of a Chinese dream, which looks like you have that same possibility there that you do here.
All right, well, dreams came true today for lots of people.
Dreams came true.
Thank you so much, Denmark West advisor with K1 Capital.